Good afternoon, everyone, and welcome to Weekly Wrap for a glorious November spring day. Me and you today, Mick. We seem to be having this trend at the moment of only two of us being on the screen, but at least we're mixing it up. So you and I, and how's things in Kilo?
Yeah, no, all good in Keilor. We don't have Luke with us today. He's actually in Brisbane the last few days doing some work with some of our clients that have decided to spend more time in Queensland than in Victoria. And who can blame them after all the things that we've had go on in Victoria over the last a few years. No, I'm not surprised that we're not going to be doing more trips to interstate places to visit our clients that used to live in Melbourne. So,
Yeah.
no, all good here in Keilor. It's the sun's out and it's another Friday, so it's always fun.
It is exactly right, and it is a cracking day. I do agree with you. Brisbane and the sunny coast and the sunny state, I should say, get lots of good weather up there, and certainly a lot better than us. But we can't complain with what we've got today, and I'm sure the carnival at Flemington is not complaining either with all the glorious sunshine. So they'll be happy going into tomorrow. Now, I'm going to start with a quick thing. I have a 2-year-old sitting next to me. For those that are not aware, my darling wife has gone away for the weekend on a girls' weekend, so I have a 2-year-old next to me. If you see me stick my arm out or anything, that's what it is. So I apologise if anything goes wrong there. But better get back to
Well,
finances,
we
Nick.
we should probably mic her up. She might make more sense than we do.
Oh, I don't know. She's sort of staring at me, going, "Oh, we'll see." But anyway, if I lose my marbles, then I'll just pass the earphones across, and you'll give her a crack at it. So. How about we start with the market numbers? What's things looking like this week as we're
Yeah,
2 hours out from close?
it's been a pretty tame week in truth, and as it stands right now, our market is sort of break even at zero. Depending. So if it finishes where it is today, right now, which is at minus 0.55, the all odds, it means that the week will be the same place we started on the Monday. So let's see what pans out there. In the US, market's off a little bit in the first 4 days. The US is down 0.25%, and the Nasdaq is actually up about 34 basis points, 0.34. A fair bit going on locally. Now, all eyes were not on the Melbourne Cup on Tuesday. If you pay attention to financial markets and the like, you had a very keen interest in what was happening out of the Reserve Bank on Tuesday at 2:30, and the outcome was actually a rate rise of 0.25, so 25 basis point rate rise, taking us to the official rate of 4.35%. Look, I think that was a foregone conclusion. If for those of you that have heard us talking about this in the last couple of weeks, it certainly was the data wasn't working in the favour of keeping rates the way they are. So probably going to be more pain for those households that need it the least, I would say. And we've spoken about this at length, Tim, about it's always unfortunately the households that can least afford the pain that actually suffer the pain, and this is going to hit hard with a lot of those people that are in mortgage stress or approaching mortgage stress already.
Yeah, most definitely. And well, we've sort of, as you said, talked about this point a lot. But if you probably go back, what, 6 to 8 months ago, we were talking about this period of the year would be where rates started to come down. And obviously that dynamic has completely shifted now. I suppose the small positive or the silver lining, if people want to try and look into it, is that the last time interest rates rose, we had that pause and we had one more increase and then it stopped. So I'm sure there's plenty of people out there hoping that will be the case. Not so sure that is going to be the case. So I think based off what we're seeing at the moment.
Yeah, and this was at a time where the US had kept their rates steady a week earlier. But the language coming out of the United States is that they don't believe that they're done just yet with fighting inflation, which is code read between the lines that we may need to have further raises into the future. So let's see how this one flows through the economy. We're starting to get snippets though of a couple of things with some significant redundancies and job number cuts as well. Wonder how that'll affect the inflation figures coming out over the coming months as well, because we've had a really tight employment market as well during all this, which also adds to inflation, ironically. So let's see how our markets and how our economy can cope, and that we haven't tipped things over into sort of a perilous recessionary territory.
Yeah, definitely. And the next data I think I read was, don't quote me, 28th or 29th of November, somewhere around there, which is obviously a week before the RBA decision. And it's also, there's no RBA meeting in January either, is there? Which is always, an interesting one going into the Christmas period. So yeah, they've got, don't do anything or whatever they do in early December. There's 2 months obviously before the next meeting to do something there. So it's going to be a very interesting one. And like you said, no doubt markets had factored it in. It didn't impact on markets too greatly on Tuesday when the decision was announced. And foreign exchange markets, I remember you saying going into the end of last week, had already factored in that the rates were going to change. So plenty to talk about, but also, as we said, probably something that we all expected going into Tuesday for those watching the Melbourne Cup, but also watching the financial side of things like we always are. One of the interesting things we're just going to have a quick chat about was obviously that then another decision is another increase likely on term deposit rates and bond yields as well. So that is going to play into a factor obviously next year with now bonds having that higher yield going through 2024.
Yeah, so with the bond rates, I mean, we saw 10-year US Treasuries spiking at about 5% in the last couple of weeks. That's happened. They've come off a little bit since then. They're down to about 4.6%. And so bond investors over the last period of time have actually had a very difficult time because bonds supposed to be a defensive asset class to protect you in certain cases, but in the way that the yields have been spiking, that hasn't been the case. So, there's a question mark now about what sort of bonds one wants to get involved in. Do I need to go further up the risk curve with my credit and the bonds that I'm chasing versus if the US Treasury yield is giving me 5% over a 30-year period, am I happy with that? Is that good enough for me rather than that have to take the risk? So bonds are going to be a very big topic because it is those rates that determine the risk-free rate, which then determines how we asset allocate, how we allocate our capital when we're investors.
Yeah, I actually had a conversation with a client. It was yesterday afternoon, and they said they'd been speaking to a mate, and a mate said they can get 8, 9, 10% returns very easily. And I said, "Oh, what asset classes are you?" Because we didn't know it's a diversified portfolio. I'm not seeing anything that's 8, 9, 10% with no risk, as you're saying there. So even with bonds going up, yes, the yield's better, but there's still a bit of a likelihood there of volatility in those asset classes. So yeah, plenty of stuff for us to pull apart every time we have a discussion
Oh,
about
for sure.
portfolios.
Yeah. Look, if someone quotes you a rate with the word guaranteed against it, it's usually going to be suspect, and I would proceed with caution, particularly in this environment.
That was exactly what I said, Mick. You know me too well. I said, that sounds good, but it doesn't sound guaranteed to me. That's for sure. Interesting thing we were going to talk about was the founder of WeWork is in the office share space, which is very popular coming out of COVID, has they filed bankruptcy during this week, which is an interesting one. And obviously we've had this shift to hybrid work and then to shared offices, people downsizing offices and looking at these shared sort of ones. So it's an interesting one. There's plenty of these sort of office share ones out there, and obviously we know a bit about these ones, but you would think they'd be highly popular to be a cheaper option than a fully sized office with this hybrid work, but plenty of people not really buying into them, and this going bankrupt is an example of maybe they're not as good as what they were made up to be, I guess, going out of COVID.
Yeah. And look, I think there's a number of factors at play here. One is the realities of the office environment in general since COVID. So, we've got this dynamic of, flexible work arrangements, people working from home, some companies wanting people back in the office, some companies trying to land in a hybrid situation. But what it has meant is that it's put pressure on those office spaces, and the WeWork concept or the shared office space concept is very, very capital intensive. So, you think about, in a typical real estate point of view, let's say that you want to run one of these on Collins Street, and I actually know of one that has shut the doors. Recently, it wasn't a WeWork, it was another type where one of the tenants, a friend of ours, has had to look for a different location, and basically, if they don't fill it quick enough, it doesn't stack up. And because the capital intensiveness is so high and interest rates are now going up, you're not borrowing. When these things were formed, interest rates were 2 and 3%. Now they could be close to double figures, and banks do not like lending when it comes down to low occupancy rates and therefore low yields, and therefore the question comes into the asset valuation. So I think we're going to see a lot more of that, which is a shame, because that that collaborative nature and the shared office space, if you get it right, I think can actually be quite dynamic. And perhaps the ones that will continue to flourish might be the more niche type ones, where maybe it's a bit of a technology hub, where there's a lot of entrepreneurial types that are there and the like, where they can genuinely collaborate. But pretty risky business these days, taking on 3 floors in any CBD and just assuming that you're going to fill them, and get people to pay a subscription service.
Yeah, and you're
Very
right.
difficult.
You're right that they look and they feel wonderful and there's a buzz about them, but they need to be occupied. And when they're half empty and you walk through them, and we've all got, people, mates that we've been through these, and you go, they look really cool, but when they're half empty, they just don't have a good buzz about them. So, and I think it's also, there's plenty of companies that run these, right? So it's probably that supply and demand factor's gone a little bit too far the other way. So understandable at the same time.
And you've now got, I think, genuine competitors as well. You've got office spaces that may have 10-year leases attached to them that are genuinely half empty already, and they're looking at ways of subletting their space. So all of a sudden there's a lot more options for people that don't necessarily need a full-time 500 square meter office, and that's causing the grief, I think. So I don't think WeWork will be the first or the last in trouble in this space.
And when you see them, like even in Melbourne, there's so many of them. It's not like there's 3 or 4 of these. There's like 10 or 15 of them scattered around. So a bit of a consolidation, I think, is likely to happen. Those wondering, I've got a 2-year-old now looking at the screen, wondering, it looks exciting. So, and you hear any noises, that's what that is. But that was probably the last one of my bullet points for the week. Is there anything that we've missed that you want to chuck into the mix?
No, that's about it. Been a pretty timid sort of week on markets. It's interesting. We always have a chuckle. It's a race that stops the nation. It actually does, because volumes of trades are down and the like, and and not a hell of a lot happens in the markets. So we have a visitor.
We have a visitor. Sorry to everyone listening. Someone wanted to desperately jump up and say g'day. But you talk about the Melbourne Cup, Mick. Would you like to guess which one she picked? Favorite color, yellow. So she was very happy with the yellow one winning.
I like it. I like it. Sometimes it's better to just pick a color or a name. I say you'll have more success.
Yeah.
So no, all good. So yeah, look, from my perspective, I think happy to wrap it up and head off for a quiet weekend. Sounds like you're going to have a quiet one.
I don't know if I'll have a quiet one. I think I'll have a busy one, but it'll be it'd be good to spend some time with these two. It's always good to spend some time with the kids when they're young, because as you know, well, they grow up very, very quickly. So the only other thing I was going to mention, if people there's a KO highlights package of Glenn Maxwell's amazing 201 not out from the other night. So if anyone hasn't watched that and got 18 minutes over the weekend, go back and watch that. The most unbelievable one-day innings of all time. There's no doubt about that. I'm not going to go as far as saying the best innings of all time, because I think that still belongs to Ben Stokes when he single-handedly tore us apart in the Ashes and hit 160 to win the game for them. But yeah, pretty unbelievable to smack 201 while Pat Cummins stood at the other end, I think, and added 5 runs to the partnership or something ridiculous like that. But yeah, by the end, he's standing there not being able to move.
It was a pretty heroic performance, and maybe having a tournament that lasts for about 7 months suits the Australians. We sort of work our way into the tournament. We're coming good late in the tournament, which is the business end, which is important. Yeah,
exactly. And maybe it's falling off a golf cart and concussing himself that might have knocked this into him as well. So
I'm not going to go there.
We'll leave it at that. All right, lovely to see you all. And so we'll be back again next week. Pulse check again next Wednesday, Mick. So we haven't got a topic lined up, I know, just yet, but we'll have a chat to Luke early next week when we're back, and we'll find one that suits and go from there. So enjoy the weekend, mate, and everyone else out there enjoy it as well.
All right, see you guys. Take care. Bye.
Bye.